Hey, everybody. Hope you're having a great day. I want to button up some things on this next offering. This one came on really quick. A lot of you know that. I went out with it maybe on Tuesday or Wednesday to give everybody a heads up. I did a short video, very similar to this video, but I'm going to go into a little bit more detail on the financials in this video. I just want to run through this in about 12 to 15 minutes. This is what I want these deals to be like. I want it to be real simple, not take a lot of your time. If you want to see any of the due diligence or numbers, I can certainly provide that for you, and you're going to see some of their financials. Um, and I want to make this real easy. I want to make investing in alternatives super easy for anybody that wants to get involved. So let's go ahead and go through this. This is the disclaimer real quick. Just most of you know this investing in real estate is risky. Investing in anything it has its risks. Um, these are just projections, pro formas, where we think what's going to happen. So that's kind of what's going on here. Freeze this and read it if you need to. But that's the disclaimer. So what I want to cover is just the sponsorship team and the offering summary, self-storage as an asset class, momentum, which is the fund we're investing into, portfolio, what they have, the market, and the financial analysis, and we'll look at that. And then we'll talk about how quickly this one has to happen because we don't have a lot of time on this one. Here's the momentum team. This is Guy Varble and his wife Nikki, and they have a general partner named John. They also have three or four other people that help them vet deals and underwrite deals and find deals. I've met these people twice. I met them out in Portland a few weeks ago. I met them in Orlando. I like them a lot. They're just good people from Iowa. That's where these assets are. They're kind of excited about these because they're in their backyard. They haven't really bought much in their backyard, but they love these assets and they feel like they're priced right. So I'm going to dive right in real quick because some of you have already seen a lot of this. We're going to look at the returns that are projected, and some of you saw my last video does show how these returns are better than what they had. I do think I made a mistake on the cash on cash and maybe accidentally said it was bigger than this. And that's because of some of the ways that I designed this fund to make it simpler to divvy out the money. And we'll talk about that in a little bit too. But we've got a 19.2 internal rate of return. Cash on cash average is 7.7. So in the beginning of any deal like this, the cash on cash is going to be lower and it's going to get bigger by the end. And you can see it climbs all the way up to 11.3 for 11.73, which is net. These are net numbers that you guys get. It's a little bit odd the way this thing figures out, but you invest your 50, and in year one you're going to get 24.17. These are projections. 36. It takes a dip there in year three. Most of you know why, because they have an interest only loan for 2 years, and in year three the interest only turns into they have to pay principal, so their debt goes up there. So it takes a little dip, but it climbs again, and by year five is when we're hitting that cash on cash of 11.73. Basically you're doubling your money in those 5 years, and this all adds up to be like 100. I wish I had added it up for you, but it's not just 99 that you're getting back. You're getting back 50, plus you're getting about back 49,776 from the sale of the property. And actually, not no, that's probably not true. That 49 is including the cash flow for year five. Okay, but you also have this accumulation with it. Okay, so you do end up at the end of the day with the equity multiple is what I was able to make stronger and make that into about a 2.26. I thought it was going to be 2.25. And your average annual turn of 25% is pretty sweet. So this doubles your money almost in 4 years, and we'll see. I hope that's true. But if we get a fifth year, we're going to do better. Um, what we were able to negotiate with Guy and Nikki here, the terms, they're doing a 90-10 split with the fund. If you don't know, they only do 60-40 with their retail investors. So you could call Guy and Nikki and invest 50 with them, and they're going to give you a 60-40 split, which I promise you is a lot less than what we were able to get. My fund is then in turn going to do an 85-15 split with my investors, you. And the sponsor is paying me a fee outside of all this. It doesn't impact anybody's numbers, and that helps me to pay my fund fees. And the cool thing is that because of that, I'm able to only charge a 0.5% fund fee which the only kicks in year 2 through year 5, and it's $250 a year if you're a $50,000 investor. So that is already shown up here, is already reflected in those numbers. So I just want to make sure that you guys totally understand um, these numbers. And if you have questions, please email me. The 90s-10 split, some of you are probably going to go with your calculator and you're going to do 90 times 85. So in essence, what this is, let me check, is a 76.5 split with me and Guy and Nikki. So you're getting 76.5, and I guess we're getting the rest, which is 23.5, I think. So I want you to see that there is a pref in this deal. Well, let me get to that here in a bit, and we're going to move into the rest of the deal. And again, if you saw this, I'm sorry, but self-storage, these guys are good at self-storage. This is what they do. They're focused on it. If you don't know much about self-storage as an asset class, we feel that it is very recession resistant. It does well in good times and bad. And just think about it. In good times, people are buying lots of fun things, boats and jet skis, and they're storing them. They're buying more junk. And in bad times, when they're having to move out of the apartment, move back in to mom and dad's basement, they need to store stuff as well. So self-storage has gotten the reputation for being recession resistant. Guy and Nikki have created their own guidelines. They only look at self-storage facilities with strong cash flow potential, long-term value appreciation. So that's really what apartment building people are trying to do. It's just there's so many things. Like Guy and Nikki are getting owner financing for 5 years. You can't get that in a huge apartment building. You just won't see it. And that's why apartments are, some of them are in trouble, because you're at the whim of the debt market on that. So this is more about, if you want to read some of these details, I encourage you to read them. Freeze this video, read all that you want. I'm not reading through this for you, but it's just saying that self-storage is here to stay, and it's not going away, and it's going to get stronger. Just more about Guy and Nikki. They have a really good track record. They've transacted in 16 states. They've accumulated 6,500 rentable units and over 1 million square footage. They've transacted on 28 different facilities. I like their track record a lot. They've created a system that is really good almost anywhere they go, and they utilize third-party management, which at first I thought that was odd, but then they're honest. They admit they're not the best at just getting in there and managing it. They love sourcing deals, putting together the deals, and then they have an excellent third-party management company that they have a history with and a track record with as well. So that's why they're so excited. They know that they've done this before in other markets, and they're going to do it again here in central Iowa. So again, their conservative approach. They only do 70% loan to value on their debt. This one's great because they got a 6% debt on owner financing. They got 2 years of interest only, which is hard to get sometimes. So I really like the deal for those reasons as well. Again, why self-storage? You're welcome to read through all that. I'm going to leave it there just for a second so that you can pause and read it if you want. And why facilities, low risk, high demand, high occupancy rates, all that stuff. I may have some, okay. So location, shortlisting, process, and criteria. Again, this is their secret sauce, how they source deals. Not going to go into that very much. Let's look at this real quick. This is the 13 property Central Iowa deal. I'm going to upload more details on the individual spaces. That'll be in the investor portal. This is a video for you to decide if this is for you or not. We did get them to come up on the pref. So they came up from a 6 to an 8, but it's so hard to sometimes do that inside my fund. So that's why we're just doing a straight split with you, whatever comes in from Guy and Nikki. I'm just doing an 85-15 split with you guys, and you get the 85. And so we're kind of getting paid at the same time. That again helps me to offset some of the fees. But there is no real true pref. It's in my fund, but it's not showing up as a pref. But it is being paid and accumulated to us all as well. So if you have questions about that, I'll jump on the call and make sure you understand that. The deal structure again, the debt is 8.8 million at 6% interest only, and then a 27 AM. Returns, they're trying to double our money. Oops. And um, that's the IRR that you are getting inside my fund. This is their executive summary. Not going to read it all, but what they do is they really try to get good and lean on managing the property, and that's where the money's made. If you can get the expenses down, and again, some of you that watched the first video, you know this thing's not being managed well at all. They've called the phone numbers that are listed, and the phone's simply not being answered. So there are some vacancies. I think they're at about 85 or 86%. They feel solidly good that they can get to 93%, which is uh, not necessarily an easy number to get to, but they've done it before, so they feel like they can get there. So here's just a picture of the facilities. Um, Boone, Iowa, Granger and Madrid. I think it might be Madrid. Huxley and Ames. Iowa State's in Ames. And again, these are real close to Guy and Nikki, so if they do have to go put boots on the ground, they can real easy. These are in just kind of a tertiary market, y'all. These are good looking facilities. I don't think they probably picked the best 3 facilities to put on here. These are good looking facilities with gated access, concrete around them. They're not always like this, and I do think some of them are gravel and may not have gated access. So, but these are good looking facilities. I like these. Again, here's the sources and uses. Guy and Nikki, the purchase price is 11 million, but they're raising a little over 12. Some of that's going into new doors, paint schemes, and different signage and different things like that. They've got some working capital in there, and they have some fees in there. They're raising 3.2 million. Again, we're getting a really good deal on about $1 million slice. Okay, so not everybody's getting this deal. Guy and Nikki have cut this deal for us. If they do 90-10 deals with everybody, they really can't grow their business like that. So on a third of this raise, they're letting us do 90-10, which is a great split. I'm not going to spend a lot of time here, but freeze this and look at it if you want to. Again, these are the gross deal numbers, so this gives you a good idea of how much is passing through to us. The IRR on the gross deal is 23.4. They went back and did some changes to the underwriting, so the multiple went up a little bit for the gross deal. I think they feel pretty good about the taxes. They feel like they way grossly overestimated taxes, and I think they may have, and they adjusted that, and I think that made that equity multiple come up to 263. But we're passing along a 2.26 to you guys, so you see how much of the deal is actually flowing through to you. You're welcome to study those numbers as much as you want. You can see that the debt service does pop up from $526,000 a year to $680 a year in year 3. That's why you'll see the little drop in the cash flow that we saw a while ago. Where are we at on time? 13 and a half minutes. All right, so here's our timeline. Today is October 11th. If you're watching this video today, great. You've got 7 days if you want to invest in this. I'm only looking to raise 150 to 200,000 for this. Other investors, other friends of mine, other fund managers have reserved similar amounts of money, and we're all trying to hit that $1 million mark so that we can take advantage of this, because I think it's a great deal. I will be investing in this also. I'm also investing in our other deal that's kind of on the back burner right now called the PAVE, but I'll be investing in this. So go ahead, if you don't have a portal registration, if you've not invested with me before, go ahead and get on the portal, get your registration started. Come next week around the 14th, we'll have our documents ready for you to execute and go in and start seeing things. And funding deadline will be October 17th, which is next Thursday, okay? Next Thursday. Oh, wow. Okay, it's only 6 days away. So anyway, we have 7 full days, I guess, but we need to get this going. So go ahead, if you have IRA funds, go ahead and start getting that lined up. Do all those things as soon as possible so that we can wire money into the account on Wednesday the 16th, and then hopefully, or the morning of the 17th, because I need to wire on the 17th. So 15 minutes. This is what my goal was, to go through this in 15 minutes. Again, if you have questions, reach out to me and we can talk. But I hope you see the value in this deal. This is a great bread and butter deal to put in your portfolio. $50,000 minimums, and if that's a problem, reach out to me. But we do need to try to hit our 150 to 200 range. So let's see how many people are interested in this. Again, reach out if you are interested, or go straight to the portal and do a soft commit. And hopefully I'll have that up by the end of the day as well. All right. Hope everybody has a great day. Thanks.